All right, here we go, guys. Tesla is currently sitting at $361.39. Over the course of the day, it's down 5.42%. Over the last 5 days, it's down 1.45%. Over the past month, it's down 10.59%. Over the past 6 months, it's down 17.3%. Year to date, it's down 19.82%. Over the past year, it's up 27.53%. Over the past 5 years, it's up 63.47%. And on a maximum chart going back to July 2nd, 2010, Tesla's up 28,071.09%. Tesla's interesting. Very interesting stuff. So here we go. They got a PE ratio of 335.31. Okay. They got a 52-week high of $498.83, a 52-week low of $214.25, with an EPS of $1.08. They got 3.75 billion shares outstanding and 135,000 employees. I'm recording this on April 2nd, 2026. So take that into consideration. Tesla declined following a first quarter delivery miss that overshadowed year-over-year growth. Analysts project cautious near-term performance as the company pivots resources from legacy models toward the April 2026 Cybercab production ramp and AI ventures, with sentiment suggesting a neutral hold consensus as markets await the full April 21 earnings report. Okay. The bullish view. Autonomous pivot and Cybercab launch. CEO Elon Musk reaffirmed that Cybercab production is scheduled to begin in April 2026. Analysts view this as a critical catalyst for shifting Tesla from a traditional automaker to an AI-driven mobility titan, potentially unlocking high-margin recurring revenue through unsupervised full self-driving subscriptions and robotaxi commissions. Expansion of affordable vehicle lineup. Tesla has introduced lower-priced standard variants of the Model 3 and Model Y approximately $5,000 below previous base models to attract cost-conscious buyers. Additionally, a new $59,000 dual-motor Cybertruck trim was recently unveiled, aimed at broadening the appeal of the stainless steel pickup to a wider consumer base. Energy segment growth potential. Despite a sequential decline in storage deployments to 8.8 gigawatts in Q1 2026, the energy business remains a key structural advantage. Long-term projections highlight the Megapack 3 and the doubling of Houston Megafactory capacity as drivers for high-margin floor growth that offsets automotive volatility. This is the bearish view now. Delivery miss and demand concerns. Tesla delivered approximately 358,023 vehicles in Q1 2026, missing the analyst consensus of roughly 365,645. This represents a sharp 13% sequential drop from Q4 2025, signaling that global EV demand remains under pressure and inventory levels are rising faster than deliveries. Margin pressure and valuation risks. The shift towards lower-priced vehicle variants and potential price war with Chinese competitors continue to threaten automotive gross margins. With a trailing PE ratio exceeding 340, critics argue the valuation requires perfection and leaves little room for execution errors in the upcoming Cybercab ramp. Regulatory and execution overhang. Tesla's autonomous ambitions face intense regulatory scrutiny from the NHTSA. Analysts warn that any failure to secure road exemptions for the steering wheel-free cab or delays in Cybercab or delays in mass production could lead to significant downward revisions in price targets and investor sentiment. Alright, that's very interesting. So, They're trying to get the Cybercab stuff going. Let's see the earnings. Tesla's always got all these different things going, all these promises to be be fulfilled, and it's cool when they start to come to fruition. It's very interesting, but like, it's it's a bumpy ride. Do you trust in Elon or don't you? Okay, so this is all the same stuff we just read. Let's go and look at the earnings. So they last reported on January 28th, 2026. The normalized EPS. Oh, sorry. They beat EPS by 10.96%. They were supposed to get 45 cents. They got 50 cents. Revenue estimate, they beat on revenue by 0.49%. They were supposed to get 24.78 billion. They got 24.9 billion. All right. They beat. Let's go down and see when the last time that they missed was. There's one. There's a few. Okay. So, just looking right here, last time is Q3 2025. They missed EPS by 10.53%. Then they missed in Q2 2025 by 0.97%. They missed in this is 4 in a row that they missed. So just looking at their blatant numbers and stuff, you're not going to be, you're not going to be impressed, I guess you could say. They miss pretty often. You know what I mean? They missed on revenue here in Q1 2025, 9.34%. Then they go back to Q4 2024. They missed. Then you go back to Q3 2024. They hit in Q2. Then they go back to Q1 2024. They miss again on both. So, that's not what you're into Tesla for. You're in for like the future idea of it. You know what I mean? I guess you could say. So, let's read an article about them. Alright. This is just the last one. Let's see if they let us read it. This is just the newest one that popped out. We got ads, we got videos, we got everything. We got everything here, guys. Alright. Tesla sales rise after brutal year of Musk boycotts, but still fall short of expectations. By the Associated Press earlier today, April 2nd, 2026. New York AP, sales of Tesla vehicles rose in the past 3 months after a brutal year of boycotts over Elon Musk's politics, but still fell short of expectations. The company reported Thursday that sales rose 6% to 358,023 in the 3 months through March. The first time in 3 years it posted a first quarter increase from the year earlier period. The increase follows a year of plunging sales due to an aging lineup and boycotts over Musk's right-wing political stands. Still, the results disappointed investors who sold heavily on Thursday. One reason was that sales were 6% lower than the 381,000 that financial analysts had expected, according to a survey by researcher FactSet, and they were sharply off from the sales for the 3 months ended in December. Tesla has to contend with lower demand due to the September expiration of a $7,500 tax credit for EV buyers, a blow to sales across the industry. Okay, so their $7,500 tax credit expired. The company is hoping cheaper versions of Tesla Models X and 3 introduced late last year will eventually lift sales. Tesla is also now producing a self-driving Cybercab with no steering wheel to attract customers. Details on the new offerings could come out on April 22nd when Tesla reports quarterly earnings. Financial analysts expect the company will report net income roughly doubled to 25 cents a share on $23 billion in revenue, according to FactSet. The heavy selling Thursday pushed Tesla stock down 5.4% to $360.59 a share. Still, the stock is trading 30% higher than a year ago, and its valuation is sky high too. 181 times expected earnings versus 22 times for the broad market. That reflects a marketing victory of sorts for Musk, who has been telling investors to focus less on car sales and more on the company's chances of dominating a future in which fewer people own cars. Self-driving Tesla robo-taxis are nearly everywhere, and Tesla's Optimus robots are taking over for humans in factories and homes. Before the future comes, if it does, European and Chinese EV makers are stealing market share. Chinese maker BYD recently reported it had made 2.26 million electric vehicles last year versus Tesla's 1.64 million to become the new record holder. That's it. Alright. Let's ask this. Besides car sales, how does Tesla make money? So, I think this is important to think about when you're talking about Tesla. Just to be clear, I don't own Tesla, and I really kind of don't like Tesla as a stock. I will trade it sometimes, but it's not like, I don't know. I don't like it that much. If I'm being totally honest. It's just that the numbers are not good. While selling electric vehicles remains, While selling electric vehicles remains Tesla's primary engine, the company has aggressively diversified into energy, software, and infrastructure. As of 2026, these non-auto segments are growing significantly faster than car sales. Here is a breakdown of how Tesla makes money besides selling cars. Energy generation and storage. This is currently Tesla's fastest growing business unit. It focuses on capturing and storing electricity for homes, businesses, and the electrical grid. Megapack and Megablock, massive battery systems sold to utility companies to stabilize the grid and store renewable energy. The Megablock is a newer, high-density unit designed to replace fossil fuel power plants. Powerwall, residential batteries that allow homeowners to store solar energy and provide backup power during outages. Solar roof and panels, integrated solar technology for residential and commercial buildings. 2. Software and subscriptions. Tesla is increasingly becoming a software company, creating high-margin recurring revenue. Full self-driving FSD, Tesla recently surpassed 1 million active FSD subscriptions. While they previously sold a perpetual license, the shift toward a monthly subscription model, currently around $99 a month, provides a steady, predictable income stream. Premium connectivity, a monthly subscription for in-car internet, live maps, and video streaming. Acceleration boost, one-time software purchase that unlock higher performance in existing vehicles. I ain't gonna lie. That would make me mad. That's all makes me not want to own a Tesla. I'm sitting here hearing this. I'm like, bro, no. I want to go out here and crank on something in my engine and make it go faster. You know what I mean? Screw buying a freaking software update. What are you talking about? As the fleet of Tesla, services and infrastructure. As the fleet of Tesla vehicles on the road grows, so does the revenue from maintaining and supporting them. As the fleet of Tesla vehicles on the road grows, so does the revenue from maintaining and supporting them. Supercharging network. Tesla has opened much of its network to non-Tesla EVs using the NACS standard, turning its charging stations into a global fueling utility. Interesting. Service centers and parts. Revenue from out-of-warranty repairs, body shops, and official Tesla parts. Insurance. Tesla uses real-time driving data to offer insurance directly to owners in several U.S. states and international markets. They just got a little hand in everything, don't they? Okay, so this is something a buddy told me about that I thought was very interesting. The regulatory credits. Tesla earns green credits because it only produces zero-emission vehicles. Other automakers that fail to meet government emission standards must buy these credits to avoid heavy fines. This is essentially 100% profit for Tesla, as it costs them nothing to generate these credits beyond their normal production. Emerging AI and robotics. While still in the early stages of commercialization, Tesla has begun to monetize its AI investments. Optimus humanoid robot initial industrial sales and internal deployments have begun, aiming to automate labor-intensive factory tasks. AI as a service. Tesla is Tesla is positioning its Dojo supercomputer and AI and Cortex AI clusters to potentially license its AI training power, or FSD software, to other manufacturers. So their automotive sales are about $69.5 billion. Their services and other are about $12.5 billion. Their energy generation and storage are about $12.7 billion. By the end of 2025, non-automotive segments accounted for over 25% of Tesla's total revenue, a share that continues to rise as the company pivots toward becoming a physical AI and energy infrastructure giant. So that's Tesla for you. Do you think that there's going to be Optimus robots in every factory? Do you think that there's going to be no steering wheel taxis running around on the streets every other car? If so, then you might want to buy a Tesla as a stock and invest. If not, then maybe not. I mean, their numbers are pretty awful. But, Elon Musk, this guy, he's pretty unstoppable force. I don't know. Let me know what you think in the comments. That's enough. That's enough of that.